What is going on, everyone, and welcome back to Explain the Charts. Today we are taking a deep dive into Intel Corporation, ticker Intel, as of Friday, November 7th, 2025. There is a ton of news swirling around Intel and the broader semiconductor industry, from potential AI partnerships to concerns about a tech pullback. So first we'll break down the headlines and then jump into the charts to see what the price is telling us. First, let's talk about the news, which is a mixed bag of bullish catalysts and serious headwinds. On the bullish side, there's significant talk of a potential AI chip partnership with Tesla, which would be a massive win for Intel's foundry services. This comes as Intel's new CEO, Lip-Bu Tan, vows to refocus the company on engineering excellence and fix years of mismanagement, a narrative investors seem to love. The stock's performance reflects this optimism, up over 97% year-to-date at one point. However, there are reasons for caution. Broader market sentiment is shaky, with jitters over frothy AI valuations causing tech stocks to get pummeled recently. Specifically for Intel, a Bank of America analyst warned that the company still faces steep competitive challenges from rivals like AMD and ARM and is still lagging in the critical AI accelerator market. Historically, Intel has also been vulnerable to major market downturns, seeing significant drops during the dot-com bubble, the 2008 financial crisis, and the 2022 inflation shock. This sets up a classic battle between a compelling turnaround story and significant underlying risks. Now let's see how this narrative plays out on the daily chart. Looking at the full picture, this has been an incredibly volatile year for Intel. We can see a catastrophic drop in early August 2024, likely from a poor earnings report, where the stock gapped down from around $29 to nearly $21 on monumental volume. The price then bled out for months, eventually finding a bottom in April of this year. Let's zoom into that bottoming period. Here, between April 4th and April 9th, 2025, we see a final, violent shakeout. The price plunged to its 52-week low of $17.66 before rocketing back up to over $21 in just a couple of days on some of the highest volume of the year. This is a classic capitulation event, where the last of the weak hands are forced to sell, creating a powerful reversal and establishing a major long-term support level. Following that bottom, the stock began a slow recovery before absolutely exploding in late September. Let's focus on that incredible run. From a base around $25 in mid-September, the stock surged dramatically, gapping up on September 18th and then again on the 25th with massive volume, eventually peaking at its 52-week high of $42.48 on October 28th. This meteoric rise directly correlates with the positive news cycle about the new CEO's strategy and the Tesla partnership rumors. The market was clearly pricing in a best-case scenario for Intel's turnaround. The prior resistance around the $30 mark was completely shattered and now should act as a major support level if we ever see a deeper correction. Now, let's switch to the 1-hour chart to analyze the recent price action since that October 28th peak. After hitting $42.48, we can see a clear trend reversal as sellers took profits. The price has pulled back and is now consolidating in a range, finding some support around the $37 level. This is a critical zone for the stock. It's the first significant pullback after that massive run-up. Holding this level would be very bullish, as it suggests the stock is simply building a base before another potential move higher. A break below this support, however, could open the door for a deeper correction towards the $34 to $35 area, which was a previous resistance zone in early October. Finally, a quick look at the 15-minute chart shows the very recent price action from the last couple of days. We see a sharp drop on November 6th, followed by some choppy, sideways movement around the $37.24 level. This shows us that in the immediate short term, neither buyers nor sellers are in full control, and the stock is waiting for its next catalyst. So, to recap, let's lay out the key levels and potential scenarios. The most important immediate support level is the recent low around $36.60. Below that, the next major support zone is between $34 and $35. To the upside, Near-term resistance is at the psychological $40 level, with the major hurdle being the 52-week high at $42.48. For a bullish prediction, if Intel can hold above the $37 support area and we get confirmation of a major foundry partnership, like with Tesla, I believe a retest of the $42.48 high is highly probable. Let's say a 60% likelihood. A break above that high on strong volume would confirm the uptrend continuation. Conversely, for a bearish scenario, if market-wide weakness in AI stocks continues and Intel breaks below $36.60, a slide down to the $34 to $35 support zone becomes likely, a 40% probability. The things to watch for are any official company announcements regarding partnerships, the Fed's next move on interest rates, and the performance of the broader Nasdaq index. This concludes our analysis of Intel. Remember, this is not financial advice and is for informational and educational purposes only. You should always conduct your own research and due diligence before making any investment decisions.